down 44% in 2022. Is the Walt Disney Company stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at is revenue quarterly going back to 2014 for Disney, and of course in recent years the big factors that changed revenue was first in 2019, Disney acquired assets from Fox to help it launch its streaming platform Disney Plus. So that created a boost in revenues. And then, of course, the pandemic devastated Disney's revenue potential because so many of its revenue generating um, businesses rely on bringing large groups of people together, which was not, of course, a popular thing to do during the pandemic. So revenue collapsed down to 12 billion. However, the good news for Disney investors is that it's exploding back, bouncing back to 20 billion in its most recent quarter, and it's still growing, right? The theme park segment is still rebounding. It's more profitable than ever before, but revenue has not bounced up as much as it can because international visitation is still down. However, prices are up, efficiency is up, effectiveness is up. All of the operating aspects of the business are better than they were before the pandemic. Now it's just a matter of time for visitors to return and for the revenue to continue expanding. And then, of course, the streaming segment is booming. The company surpassed 200 million streaming subscribers. That's helping revenue grow. They just recently instituted major price increases for Disney Plus and some of its other streaming services as well, including ESPN Plus and Hulu. So the top line growth looks good for Disney over the next several quarters and perhaps the next several years, with the one caveat, of course, of the fears of an oncoming recession, since most of Disney's products and services are discretionary spending. If consumers face a major increase in unemployment across the board, that will hurt Disney's revenues during that time. All right, so keep that in mind when thinking about Disney's revenue growth over the next several quarters to several years. The next thing I want to look at is operating income growth, and I want to see a growing operating income as revenue is growing. And for Disney, it's interesting because I want to look at it before the outbreak, right? I want to see how the business was doing before the pandemic. And going back there, I saw very nice growth in operating profitability. Then, of course, that crashed during the pandemic because revenue collapsed. And then, while revenue was collapsing, the company chose to take some write downs, some non cash expenses that brought down profitability even more. But we see here is bouncing back nicely, rebounding to 542 million in its most recent quarter, and then a few quarters of above a billion and a half. I expect that to continue rebounding as Disney's theme parks come back, as the profitability of the theme park of the streaming segment rebounds. Of course, management said that this is the last year that the streaming segment will not be profitable. So starting next year in its fiscal year 2024, Disney's streaming segment is going to turn to profitability, and that could really increase profits for Disney because up until now, for the last 2 or 3 years, the streaming segment has been bringing down profitability as the company hasn't been investing to shift its priority from the linear segment to the streaming segment. And I also want to look at cash flow from operations. And I see a similar trend, very nice growth in cash flow from operations. That is until the pandemic caused the crash. And then it's been rebounding nicely ever since economies started reopening, all the way back to 2.5 billion in its most recent quarter. I expect this to continue rebounding as well as the business continues recovering from the pandemic. Um, and if you look back about where this is about where cash flow from operations was, it's actually higher than it was, let's say around 2014, 2015. And it'll be interesting to see how high this goes in the aftermath of the pandemic. Can they go back to these 4 billion plus quarters of cash flow from operations? And I think they can. I think the business is more more profitable now than it's ever been because of the enhancements the company has made to the theme park segment, which makes the theme parks that much more profitable because of all the price increases, the institution of the online reservation system, which allows it to manage attendance, getting higher prices at peak times, and then also the Genie Plus system, which gets more revenue from each guest that, doesn't want to wait in line. You can pay $20, $30 and spend almost $40, $50 per day extra using this Genie Fast Pass program that they've implemented. So Disney has put in several key uh, changes at its theme parks utilizing technology that's going to allow it to capture the different categories of customers, right? So if you have a customer that is in the high income bracket that's willing to spend a lot of money at your theme park, Disney has put in products and services that allows it to capture that customer at the top tier and get that customer to spend the most money it wants at the theme park. And it also has that sliding level where consumers can spend the lowest amount, get an annual passport, and spend less per visit and visit the park more often and spend more time waiting in lines and not spending as much in the theme park. So, regardless of which part of the income spectrum you're on, Disney is able to capture that customer, which I think is going to be beneficial to Disney's business over the next 5 to 10 years. Finally, let's look at Disney's valuation. It's trading at a forward PE of 20.8, the lowest it's been going back till before January of 2022. And considering that the company is still, even in 2023, I don't expect it to recapture all of its earnings power. I think its recovery is going to be more like a light dimmer going higher rather than a light switch immediately turning up higher. So, given that, I believe 2023 earnings are going to grow, 2024 earnings are going to grow, and 2025 earnings are going to grow. Uh, of course, given of course if there isn't a severe recession. In the event of a mild recession, Disney might not experience a similar crash like it did during the previous recession because of all the pent up demand from consumers wanting to spend more money on away from home experiences because they were cooped up at home for more than a couple of years, right? So, to answer the question, is Disney stock a buy for 2023? I'm going to say yes, Disney stock is a buy for 2023. In fact, it's one of my top 23 stocks to buy for 2023. I have a video listing my top 23 stocks, which I will link to at the end of this video. I think you will enjoy that. But that's all I've got for this video. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.